now it's closing in. Nothing to bear and nothing to win. Nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Step in the fire, take my hand. I'll take you higher than you've ever been. You've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day. Let's go straight to the charts, not waste a single moment of time itself. Bada bing, bada boom, here we go. So yesterday we put out this bearish trend-based fib level and we went down and wicked to it to a T by the looks of it, 27,820 right off the bottom there. I was working, or I could have put a limit order there, but I did notice that it had grabbed the liquidity here and it was holding the 0.65 nicely, so I did go long from 27,997, so we are currently long in a $5,000 position, just a little long on 5x. So we'll see how that plays out to the bubbles. So this is our pitch fan that we've had for the last 3 months. Yeah, since about here in January 15th. So it's been treating us well. So we'll see how that 0.65 bounce to take out the liquidity is. Well, what is the liquidity? This is high block capital. This is when the people leave their liquidity in the charts to be burnt to a crisp by the market maker for not using a stop loss. And then it comes back to them and repossesses their money. So let's see who's going to get repossessed today. All right. So yesterday we were talking about these guys up here, these huge bubbles of shorts. So could they come back and eat some of these 50x, if not the 100x characters? Let's reload this, shall we, and get a fresh perspective. Shout out to everyone here. How's everyone doing? Great, great, great. Great job. Let's take a look. Give me a second for this to load. Have some coffee. Okay, so we got a lot of bubbles up here. This guy's still available up here at 30K, 30,469. There's 328. Oh no, that guy was actually obliterated when we were talking about this scrap. Sorry about that. We do have this stacked amount over here. 242 at 30,850. 229 at 30,567. And a bunch of other bubbles up here. Mainly what we want to look at is the 100x here. So you got 100x at 29,671. So if we zoom into here, that region also happens to be double caked up here. So you have this guy at 29,761 caked up with another 202 million at 29,734. So just up to the 29,734 region would knock out a large overlapped pool, if you will. So you do have 100, just at 100x, you have a 242 million 100x here at the top of the range at 30K even. It could come up to, because it is stacked with this guy here. So this entire range up to 30K could be repossessed. And why do I think that? Well, as you notice, there's sparsity down below. There's nothing but broth below. If you look at these noodles to the right, these volume strands, the length of the noodle corresponds to the amount of volume. This is a hungry market maker looking to eat some ramen, and the place with less ramen noodles down here is not interesting for them. There's too much soup in the, there's too much broth in the bowl, and there's not much broth here and a lot of noodles, so they can just slurp right up to the noodles here and go up to 2669 and above, up to 2930K, get those 100x characters out of the game, particularly these guys, this 229 million at 2967, and another one that we saw just a moment ago. So this entire caked up region is seeming to be a target of sorts, and it is run for profit Friday. So let's go back to the charts. We can juxtapose the higher time frames. We have limited time because we want to catch NASDAQ in New York, get those next 3 accounts funded. We have 3 running nicely. We want to get another 3 up and running so we can get paid. So let's go ahead and look at the liquidation levels on the higher time frame. Oh, whoops, this was the same one. Booyah. Oh, thank you, Wendy. Tired, I just rode a bike back home from work. It's getting warmer now, so can't get away with, might have to shower before streaming in a few weeks or so. Getting a little bit warm. So let's see, skip the 12-hour because I don't like the minutia of it all. So you do have a lot stacked up above. Could it keep going lower? There is, let's just say about 15 billion down here. And yeah, you could come down into this pool on the 7-day. It is higher to get up to here. There is these marionette strings beckoning to the upside of if we do happen to squeeze all those bubbles up to the range here. The ones just a hop, skip, and jump below are still possible, but the imbalance on this time frame is to the upside, however far away it may be for that imbalanced pool. Let's go juxtapose the higher time frame as we break 28.2. I wish the internet was faster in my complex. It's one of the perils of this building. So the path to 34K does have some stuff here. However, as we've been pointing out, the stuff below is mighty juicy and just a hop, skip, and a jump away. So this may not be a forever play. This could just be a grab before they drop it hardcore into this 25K region. So always protect your stop loss and your equity at all costs. So yeah, there's a lot of billions leading. This is completely caked up for that idea. We could have just spawned the divergence off of this liquidity grab to go grab some of the 100x, knock them out of the trade to come back down into this, because it is a mighty long journey up to 31.2 now. About 4,000 in price action to get there. So it needs to possibly eat more of this liquidity on the sub 28K region at some point. Let's go to the 3-month.
Come on, baby. Don't waste my time. Come on! What's taking you so long?
Alright, so as we see here, this is what we were pointing out back here, how these pools above were popped. So the weight, the strings pulling to the upside waned, and the longs are getting quite mighty thick. So we did point out those cross down events and had you at hello for this move to the downside, this head and shoulders fake out to the downside. So are we seeing there's more down below here? There certainly is. There's 32 million at 27.4, 27 million at 27.2, and basically $100 billion down here in leveraged equity that they could come get. So yeah, it's not necessarily the end all be all on this long. However, I am looking at those short bubbles that are over leveraged to at least knock out some of them and recover some of that vector juiciness. So the overall narrative could be coming deeper into these pools, although when you start making lower lows, then the show could be over for this run to the upside. So are we going to see this start to make lower lows here on the charts is the question. We already had a clear picture of the liquidity from days past. You can always go back and see what they were saying. The main thing to look out for is this 1 minute time frame only contains 6 days of minutes. So all the pink bubbles that were down here, if you had been watching day in and day out, you would know there's an equal amount of size down below, which was why they had this narrative to keep going to the downside. Even though on this chart it's 18 billion imbalance to short liquidity that they could come up to. So if just going off the 1 minute, you would see what we saw in the beginning to come up to those 100x up at 29.94. It could only make it halfway or just to this thick region at 29.69 or so. But yeah, juxtaposing the higher time frames here, we're starting to make our way back into these larger pools where there are heavy amounts. 22.5 has $82 billion just chilling there. So could they come down in to eat this? They most certainly could at some stage. This is once again Run for Profit Friday. So as you see the pools below getting less, the idea of a retrace into these regions, which we've been putting out there, is not necessarily a bad thing. You got those happy campers down below at 19.5, which just won't close for whatever reason. They're looking for a moonshot to 40K. I don't know what it is. But then you got 13K, $86 billion down there at 13.5. It's just a lot of money. So that is where you start to think about that short play that came earlier this week with the cross down event on Sunday. All right, let's just see how everyone's doing. Nice. All right. So if we go to, so as everything zooms out on the yearly time frame and the yellow equals 200 billion, you don't really see that much going on because of the scale of things, but that's still a lot of money down here all the way up in that region. There's a few threadbare areas where you might see a bounce if we break down into those regions. You got 41 billion at 27.6, 57 billion at 27.2, and 40 billion at 26.8. So not that much above, but getting up to 29.2 to grab this 20 billion before they make a move down would be the smart play. So like, the idea is if you want to go down, you don't just drop, you go up and stop out the highest paid short range, which is the 100x's and maybe the 50x's, then you drop it. So you stop on rise to drop it down. Or if you're going to go up, you go down to go up. So it's kind of this narrative of stop hunting before you make that move to stop out the 100x. So if we were going to go up to this narrative that is being sculpted up onto the 34K region, you have these hundreds of billions just above here too. So if we were going to go up to this, you wouldn't just break out from here and draw your Mario flags or whatever to the upside. You would go stop hunt, and then that would be where you would get your long if you were in this narrative to go to the upside from this point. You do have that 77 billion now, 84 billion at 34.8 with the path paved there for you nicely on this yearly time frame. So when you zoom out to the yearly time frame, you can see that path paved up to 34.8, which was interesting to note. Neither bull nor bear, but just seeing this develop since March 19th is quite fascinating because it had nothing there before. Now the shorts are starting to build and pave that narrative to go up to 34.8. So you do have these pools down below, but there has to be some stacked, just as they were stacked here before they dropped, and just as they were stacked here before we dropped. You can never get all the liquidity on one side. Even down here, they left $109 billion as they built the pools to go up, because they needed to build the shorts with the idea of coming to stab this, and they got that imbalance in January, came right up with the fury to grab those guys at 23.2. All right, so I think we did liquidity justice for now. You can go back and watch it at your leisure if we went too fast. Once again, we put out that projection. That projection's finished. It's in the past. Goodbye. We were pretty accurate on where that went to the dollar, I would say. So let's go to our regularly fib charted program over at this side. Okay, so this also worked just the same for the bearish trend base fib. It went right down to that region and wicked off it. So this wick on the daily time frame, which is turning into a possible bull hammer here. So how do you measure a bull hammer? Okay, fun fact, let's move this out of the way. So if you take a fib retracement tool and you go from wick to wick, and you need your basic Fibonacci stuff here, come on.
Don't play me like that.
And you go to basic. And if the body of the candle falls above the 0.382 region and it's green, so let's say we go up to here or something and create this green candle that closes out the daily, and it's above the 382 here, then you would have this objective bull hammer. Now if we just make like a huge bullish engulfing or something like that, that's a totally different story. But if you're trying to gauge with the wick, the bull hammer, you go from wick to wick, and if the body falls within the 0.382 or above, it's bullish. And you can do the same thing for a shooting star to the downside. You go from the direction it goes. So it's going up, so you do the direction up. If it's going down, you start from the top, go to the bottom. That's how you can do it to avoid saying, oh, bull hammer, without knowing what you're doing. So you measure this. So like back here, for example, on this before the move to the upside, you could have taken this fib retracement tool and done this to the wick to wick, and the body was within that 382 on the daily. So even though we came lower down to the 706 of this retracement, you could have had that narrative of a narrative shift with this bull hammer precluding it 2 days prior, if you catch my drift. So yeah, we're getting that buy back now on the daily time frame. And yeah, let's go a little bit lower, shall we? Okay, so we did break down out of the, All right, so we did have the breakdown at this bullish trend-based fib extension level, which we were holding as resistance. We broke through, we attempted to come down to test it as support, broke into the bearish level, and now we could be coming back to bearishly retest and continue further down or not. But at the interim, looks like we're coming back up to eat that liquidity, and this is the 12-hour time frame. Let's just throw on Momentum Master while we're here. Okay, so we're gonna move on to the Momentum Master thing. What is Momentum Master? Well, link is in the description, momentummaster.info. Scroll down to features and toggle everything at your leisure and look at it in its glory. You can look at each component and read about what the trend cloud is, what are the baselines, the stochastic array, the strength and the money flow on B, and auto divergence and probability, and just what does all of that mean. So you can figure it out yourself at your leisure if you like. All right, so we're at the bottom of the Keltner channel, an ATR-based Bollinger Band system. When you get to the top of it, you fatigue and come back down to the bottom. We're at the bottom of that on the 12-hour. The 12-hour is oversold in a significant manner. The Williams also in a nice state. This is the way we like to see it. So this is good for a long idea in my mind, which is why I took it, and which is why we are up by $163 and 3% for the day. So this is what we like to see on the 12-hour time frame. Perfect criteria lined up perfectly. I just came out for work and just said, hey, that's cool, and just entered the long without thinking twice, because we're at the bottom of the Bollinger Band on the 22 as well. Low stochastic, low Williams, green. It just looks like it's setting up nicely. So 6-hour as well. 6 hours starting to curve up here. You got that Williams in the nice position. You got all three good for launch on the higher time frame, medium time frame, if you will. And the 4 hours starting to slowly lift off here. You get the crossover event, just as we had the cross down event preluding the dump. This is precluding the pump. Could be here. If it closes with this cross intact, then it will preemptively say that it's going to go up, similar to what we had here when this went up too. All right, so that's why we trust these baselines. What are the baselines? Well, as it says here, it's the first sign of reversal. The baselines are one of the few leading moving average formulas that we'll find on the market, and we've proven day after day that they are accurate. You got the cross down here, and then we dumped. And these happened in the moment. You saw them on the live. So you got that bearish divergence, and then that was your literal top, and then we came down from there. Williams suppression here, and we came down. So now the Williams is in these nice places for where we backtestably see bounces. So that's why we are potentially going up to bounce. You have bullish divergence on the hourly starting to play out here. Let's go to the Williams, or the regular indicator here. You had the crossover event of the baseline here, and it started to bounce around on top of it, never to go beneath it. So that's why we're seeing this potential rise up. If you come up to here, you might come to the 28.5 region. Let's coincide that with some bubbles. So we got 29.5, 29.5. Is that 29.5 or 28.5? Sorry, 28.5. Sorry. So the 28.5 region would put you just in this region. These are all 50x characters based on the colors. I see it could do something aggressive and just go straight up for the gold at 29.3, but that could just be to avoid these bubbles appearing on the other side. I don't know. Because if it goes up, it goes to the cloud and stalls while the cloud thins out. Okay, so the cloud will like thin out like this, start to get thin, and then you can kind of like burst through, retest it, and continue higher kind of thing. So the first hit might not be it. It might go up to come down and create a double bottom of some kind too. Which is why you should trail your stop loss and your profit, because if you get something like this, then it could come right back to your entry like, man, why didn't I just pay myself? I was up, blah, blah, blah. Been there, done that. So yeah, you should have a trailing stop loss into profit as you go and reward yourself. Take some stuff off the table. It's always a good thing. to think about. Not financial advice, of course, but just good sense of, positive reinforcement. You know what I mean? Positive reinforcement. So the cloud is the thing you're looking at to break and hold. If you do some sort of aggressive play, you could come up to the adaptive and then come down and kiss that and goodbye from there. That would be a super bullish move right there. If it does something like that, come up to the adaptive and then come up from there. Who knows? So let's see. Yeah, we're getting overbought on the hourly, but you're getting a crossover event with the leading MACD coming to say hi to that rising sun and say, are you going to go give us your golden light now or what? And it started to play out a little bit. You get that bullish divergence on the hourly too. Let's go to the 15. I got to make myself available for New York in about 15 minutes. I will bid you adieu, just letting you know in advance. You got bullish divergence on the money flow here. This was when I was getting off from my job, so we just smoothly entered there and saw that bullish divergence and just bounced off that nicely so far. So far, so good. So you got to make each hurdle the step of the way. Flip the ATR here. You're at the bottom of the Keltner, and yeah. So the cloud is flipping here. We did burst. So our first sign of reversal on this time frame is we burst above the cloud. So on these smaller battles, everything's fractal in nature. You come up, you retest the cloud, and then you're gone. So you look for these things to hold. If it comes back to this zone and this curvature starts to thin, then the narrative to go up is in. So you try to see if that occurs with the thinning nature and the reclamation of the cloud here. We had the resistance. Now we're reclaiming it. Are we going to come back and test and hold these baselines? That is the question. Okay, let's go to this S&P and see what's going on with that real quick. We'll go to the futures market, see if it's going to gap up or gap down. Looks like it's about the same. We're talking about the possible retrace down into these regions. It is slightly going down, but at its own leisure, not necessarily down. The curving down, rounded tops start to suggest going down, but that could be, we shout out to people in the Momentum Master Discord, they call that the Undertaker, where it looks like it's going down and it surges up in your face. So that could be the huge fake out. You're getting oversold on the 4-hour, and the daily is still okay in your favor here. So you could see this bounce off the adaptive here on the S&P to go up to these higher regions to take out the buy side liquidity above here. This is a daily time frame level to hold. If we can get above that point, that would be grand in terms of Bitcoin going up for what I want right now in the moment, being up in the trade for the long. So we were previously oversold. We got the cross down event on the 6-hour, which was starting to play out. Are we starting to see that come down nicely here? The Williams still could come down a little bit more for my liking here, but it could also hold and just start to curve here but it's not in that sweet spot Bitcoin just was a moment ago. You had previous bearish divergence starting to play out. If it gets negated, and it looks like it has reset a lot without giving much price action back, essentially going sideways. What do I mean by that? Well, the price action went sideways, and this bearish divergence kind of reset your stochastic without giving anything back. So is that bullish for the stock market right now? It's a good question. We are also looking on our own time, because we like to trade the NAS now, is coming, if it comes down, it would come down into these regions, which would coincide with weighted and adaptive moving averages. We had previous nukes. I shorted that to get one of the accounts funded, and yeah, we could get, it looks like you could be holding these regions as you reset. So this is once again the sideways action with a stab to the upside perhaps. Looks like it could, if it holds these regions, you could negate. Once again, on these bearish projection levels, you have these fibs that also could act as support. So if you bounce off of these support, this region isn't necessarily set in stone. While it did get set in stone for Bitcoin, we didn't see the NAS or the ES do the similar fashion as this. So Bitcoin front ran it to maybe knock out more long liquidity so they don't have to pay the longs as they ride it up here, for example. So we had this out yesterday, it's the bearish projection, and it played out. So it didn't do that for the NAS and S&P. So does that mean it's going to hold here and surge up for that run for profit Friday? Is it going to surge up and take out all the buy side liquidity is the question. It's interesting to note. Okay. All right, so for the time being, if it holds these levels, then this bearish projection is negated, which it so far has with the double tap here, which could be a W formation on a lower time frame. You can get this W going. You have 5 time frames oversold, bullish divergence coming in, the stop hunt was triggered, and then it couldn't make it lower necessarily speaking, and you could see this come up. You still have the hourly, the 4 hour, the 15s. Something could still play out here to the upside if a stop, if not just to recover this fair value gap over here. It could come up to that region and fatigue at the range, at this local range high. So yeah, that's kind of what I'm seeing right now for the stocks. Is the run for profit could be to the upside as everyone sees these rounded tops. Could be thinking like the Undertaker, it's going to come back to, I think they call it like a turtle soup or something like that. There's all these terms. There's 40 different words for snow, for God's sake. So there's just, everyone has a different way of looking at it, but it could be coming back here. Now I know when I see these things, you should trust them because they do play out. And this is also the stochastic array on Momentum Master, so you can read about that if you like. It's a never before seen formula which simultaneously monitors more than 7 time frames. So something to think about. Are we going to the upside here on NAS and the S&P based on that information? Okay. We did previously have the nuke, but the nuke did reset the hourly. 3-day, the daily, and the weekly are overbought on the S&P, but you could hold, if you hold this bullish projection, this is a bullish projection, if you hold this level at 4104, you could bounce up to even the 1618. So you could do that surge up to here before coming back down. If you're going to maintain bullish, the MACD is sitting at the 0 level, wondering if it's going to come down to the Williams or go back up here. On the hourly time frame, it looks like you're ambiguously thinking about possibly going down further or not. So this is what I see for now, and yeah, let's just see how y'all are doing in the chit chat. Good. Well, that's it. So we're going to go back to Bitcoin and just wrap it up for you in a nutshell, and then go get warmed up for the live trading sessions within the Momentum Master Discord. So once again, we're looking for this liquidity grab to the upside, run for profit Friday. Go grab some of these shorts that are stacking up quite nicely up here, at least to the 2937 region would be grand. But if you can go all the way up to the 100x people up here at 2967, and there's another nice pool at the local range high at 2997, you could basically take out all these nice long stack shorts. When you see no gap here, then you see multiple colors layered. All of these shorts are just sitting there in profit, not paying themselves. So this is why you should always consider paying yourself, because we've seen with the Fury, like this went down and it came exactly back to their liquidation and just took it back. So that's what people with the pipe dreams of downside and upside don't realize, is that it's all about liquidity. It's liquidity versus liquidity providers, through and through and through. So you gotta always think about that when you open any trade and you're up. Protect yourself at all times. So are we seeing this bounce off of the hourly, and the clouds are the baselines are holding it quite nicely, as we like to see. Even though we are getting overbought, we could get pinned here as they start to play out into the open for the stock market. So you could see this come up and to one of these regions, flag out and continue higher. Just getting into the minutia of it all. So you could flag out in a certain fashion before you bounce out, something like that, as you try to thin the cloud. The 15 is already nice. We reclaimed it. The baselines are holding quite nicely. We got to reclaim the ATR here and that. But this is what you would see if you had Momentum Master. You get these alerts to your phone at the 6 time frames oversold. And this is the definite thing we also like to see, which is you get this divergence or the crossover, and then you get a stop hunt triggered, and then from here it's kind of an easy bounce when they can't. That's about as far as they go, and then that spawns the divergence to see it move out here. Well, everyone, that's my story, and I'm sticking to it. I am long, noticeably so here. Now 3.51% up for the day, and we didn't even start the day. We're going to go into the future and scalp the living daylights out of NASDAQ and get another 50K accounts funded. Link in the description for Momentum Master and the funded trader platform Apex. If you're interested, please check it out. But please know what you're doing before you do any of that stuff. But the cool thing about a funded account is it's only $18 or something to take the test and test your grit and your might. So with that in mind, I will go do that now and try to get another 3 accounts funded. So thank you for coming on into the live and sharing your essence with me in this eternal moment. Yes, of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we will do the same. Bring the fire, bring the accuracy, bring the precision, bring the authenticity that it's required to be a good leader. So let's go ahead and give you a shout out and say have a nice blessed weekend, and we will catch you on the flip side. Peace.